Executive Chairman and Full-Time Director, Dr. Saloni Vaz, Managing Director, and Mr. Krishna Raghunathan, Chief Financial Officer. Before we begin the call, I would like to give a short disclaimer. This call may contain some of the forward-looking statements which are completely based upon our beliefs, opinions, and expectations as of today. These statements are not a guarantee of our future performance and involve unforeseen risks and uncertainties. With this, I would like to hand over the call to Mr. Satish for his opening remarks. Over to you, sir.
Good morning and a warm welcome to all participants. Thank you for joining us today to discuss the Q4 and financial year 25 results of Supriya Lifescience Limited. Joining me today are Dr. Saloni Vaz, Managing Director, Mr. Krishna Raghunathan, Chief Financial Officer, and our Investor Relations team from Ernst & Young. I hope you have had an opportunity to review our financial results and investor presentation, which are available on the stock exchanges and our company website. Financial year 25 has been a landmark year for us at Supriya Lifescience as we continue to deliver on our strategic roadmap and maintain strong execution across our operations. It was our strongest year yet at Supriya Lifescience as we delivered our highest ever revenue and EBITDA performance. We closed the year with revenue of rupees 697 crores, up 22% year-on-year, aligned with our guidance of 20% plus growth. Our EBITDA for FY25 stood at rupees 261 crores with a robust margin of 37.4%. This performance was driven by three key pillars. Capacity enhancement by utilization of Module E. We are successfully transitioning into a regulated market, driving strong results despite modest volume growth. Penetration in newer geographies and adding our customer base. Our export business continues to be a major growth engine, accounting for 85% of FY25 revenue up for 79% last year. Notably, LATAM's contribution surged into 22% from 11% in FY24. We are also gaining traction in regulated markets like Europe and Brazil, fueled by new product registrations. Going forward, we expect Europe and LATAM to drive growth. Additionally, we have launched a few new products in anesthetic category which will scale up. Our strategy remains clear: drive growth through increased registration and deeper market penetration. Our key differentiator, backward integration, has been substantial progress, reaching 72% in financial year 25 from 68 to FY24. This strategic enhancement directly improves our control over vital inputs and optimize our cost structure. We are pleased with the strong performance in our core therapies and the steady progress in other case segments, which together have strengthened our overall portfolio. What is especially encouraging is that none of our products saw a decline, reflecting strong execution across the business. As you are aware, we signed a 10-year partnership with DSM, and I am pleased to share that it is on track. Commercial supplies have started, and we are expecting revenue contribution this year. We are pleased to share that we have received a certificate of suitability, CET, for one of our K molecules, facilitating deeper access into a European market. Additionally, our Ambernath site has started validation campaigns and will commence production of liquid anesthetics and oral solids, a significant milestone of our CDMO strategy. Our new model E-Block has expanded capacity by 500 KL, taking our total to over 1020 KL. with full utilization expected by financial year 27. We now operate 2 R&D centers focused on life cycle management and generic API and Ambernath, which drives innovation in finished formulations and NCEs. Together, today, support our forward-looking product strategy across APIs and CDMO services. Looking ahead, we reaffirm our guidance of 20% annual revenue growth and sustained EBITDA margins in the 33 to 35% range. Our mid-term ambition to reach rupees 1,000 crore in revenue by financial year 27 is backed by a robust pipeline. 3 to 4 new product launches in financial year 26 and growth traction across therapeutic areas, including anesthetics, antidiabetics, anti-anxiety, vitamins, and ADHD. While the US has announced new tariff measures, details are yet to be finalized. For now, we are adopting a wait-and-watch approach. The US currently contributes a relatively small share to our overall business, and we remain focused on strengthening our presence in other high-potential regulated markets. Our competitive edge lies in deep backward integration, regulatory strength across key markets, and a strong portfolio of differentiated products. We are confident in our long-term strategy and remain focused on creating a substantial value for all the stakeholders. With that, I now invite our CFO, Mr. Krishna Raghunathan, to take you through the detailed financial performance of Q4 and FY25.
Yeah. Thank you, sir. Good morning, everyone. Let me take you all through the operational highlights of the quarter and the full year, following which we will open the floor for questions and answers. The company reported revenue from operations of rupees 184 crores in Q4 FY25 as against rupees 158 crores in Q4 FY24, registering a growth of 16% year-on-year. EBITDA in Q4 FY25 stood at 68 crores as against rupees 56 crores in Q4 FY24, a growth of 22% year-on-year, and EBITDA margin stood at 37% for Q4 FY25, improved 162 basis year-on-year. PAT stood at 50 crores in Q4 FY25 as against 37 crores in Q4 FY24. PAT margin stood at 27%. Moving to full year performance, revenue from operations stood at rupees 696 crores in FY25 as against rupees 570 crores in FY24, reporting a growth of 22%. EBITDA in FY25 stood at rupees 261 crores as against rupees 173 crores in FY24, an exceptional growth of 51% year-on-year, while EBITDA margin stood at 37% for FY25 as against 30% in FY24, improved 712 basis year-on-year. PAT stood at rupees 188 crores in FY25 as against rupees 119 crores in FY24. PAT margin stood at 27% in FY25. Our capex for FY25 stood at rupees 162 crores. Going forward, we expect our capex to close around rupees 75 to 80 crores for FY26, primarily directed towards maintenance capex and certain small projects like remote block and other requirements in formulations plants. Our working capital days increased from 124 days to 158 days on account of increase in inventory and receivables due to increase in certain batch sizes in E-block, and increase in receivables is due to increased business. On borrowings, we would like to report that for the last 6 months, we have not replaced any working capital limits except for letter of credit and bank guarantees. With that, we can open the floor for questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rachna from SIMPL. Please proceed.
Hello. 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 Yes, am I audible?
Yes, you are audible.
Yes. I have 3 questions. My first question is that we had launched a basket of new products across various therapies a few quarters ago. So how have these products scaled during FY25 and how has their contribution been to overall revenues? And do you see any opportunities further to scale these new products in the medium to long term?
So in FY25, we have actually launched only one new product coming from the anesthetic therapeutic category. And this launch has happened actually in Q4. So right now, we have not seen any meaningful contribution from this particular product because typically for any product to complete the registration in regulated markets, it takes about 12 to 18 months. But it's a very large product category for us, and we are very hopeful that in the next financial year, we can see some meaningful contribution to revenue. In the next financial year, we are expecting to launch 3 new products. The first would be launched somewhere end of Q2, and then Q3, Q4 also we are expecting to launch new products. But meaningful contribution of any new product launches will only happen 12 to 18 months from the commercial launch.
Okay, I was wanting to understand about the product we had launched in FY23. So have those products seen any growth?
So in FY23 as such, we have not launched any new product or we have not added any new product in our portfolio. In FY23, the main focus of the company was penetration into more regulated markets. So a lot of our USDMF, CEP approvals have come in that year. So the major contributors to FY23 revenue has come, and in fact FY24 revenue also has come from the existing set of products which have gotten better traction in regulated markets.
Okay. My second question is that growth in the vitamin therapy appears to be flat in FY25. Given our exclusive contract with... Hello? Given our exclusive contract with DSM for vitamin products, how much has this partnership contributed to revenues in this segment? And has it helped drive any scale the DSM project despite the flat overall growth in the vitamin therapy segment?
So if I look at the growth in the vitamin segment, actually there has been a good growth in terms of revenue. In terms of percentage, we are not able to see much because obviously our base this year is much higher. But in terms of absolute sales value, there is definitely a growth in the vitamin segment. In the last financial year, DSM contract has not contributed in a big way because we have just completed the validations and we have started supplying to their customer base, which is global. And right now, the customers are actually getting our products qualified. But in the next financial year, definitely we are expecting 30-35 crores of revenue coming in from the DSM contract. So actual meaningful scale-up of DSM you will see in the next financial year.
Okay. And one last question. We have seen strong growth in the LAC market. Is this primarily driven by APIs in the anesthetic and therapies? Beyond these, do you see growing demand or scaling opportunities in other therapeutic areas within the LAC region?
Correct. Yes, in fact, not just anesthetic, but we have seen good growth across different therapies. Our analgesic therapy has grown really well. Anti-asthmatic has grown well. Some of the newer therapies like anti-gout and anti-hypertensive, which were not contributing that much to the revenue, they have also scaled up really well. So overall, across all markets, may it be semi-regulated, regulated, emerging markets, we have seen very good growth happening across all the therapies.
Okay. Okay, that's it. Thank you.
Thank you.
Thank you. The next question is from the line of Supriya from Sri Rama Managers PMS. Please proceed.
Yeah, thank you. Thank you for the opportunity and congratulations on very good set of results. I am a little bit new to the company, so my questions are a little bit basic. The first question is, ketone hydrochloride is a large product for us, and I think we have a 30-40% market share in the world. That is my understanding. So if you can give some idea about how did we achieve, such dominant market share? Is there like a new competitor coming? And how has the realization been over, maybe like the last 10 years? If you can, because that is such a big part of our business, so I just want to understand that first.
So we do not disclose any product-specific details, so I will not be able to comment on any one particular product. However, what I would like to highlight is, in any molecule, whenever we get a leadership position, it is actually a combination of setting up the largest capacity for that product, fully backward integrating that product, and then getting all the regulatory approvals across the globe for that product. So once you have done all these three things, then you are in a position to get that leadership for certain molecules. And that is the same strategy that we use in our portfolio as well. That's the only thing I'll be able to say. Product-specific things, unfortunately, I'll not be able to talk.
But maybe just at a broad level, do you see competitive landscape in that product staying same, or our position improving, or our position declining? If you can give some qualitative color around that.
So, like I mentioned, there are three aspects for getting leadership position. One is building the largest capacity, which happens over a few years. It cannot happen overnight. We have some of the largest capacities for our top products globally. Then the backward integrated model. We have backward integrated these products up to the KSM level, which none of the other companies globally have done. And then the regulatory approval, which take minimum 2 to 3 years in any market. So today, if you go to apply a CEP or a USDMS, it's going to take you minimum 2 to 3 years to get it. So all these three are very high barriers for any company. And even if any enters, it will take them minimum 3 to 4 years to scale up that product to the level at which we are today. So I am not seeing any immediate, competition.
See, this competition word only, just a minute, I will also answer. The competition word comes only from India. We keep on talking about competitions. Competitions come everywhere, but you must understand any API, the Supriya model is 86% export. In export, nobody worries about the price. Today is the sustainability and the regularity and a quality supply. That is very, very important. That's why Supriya share in exports is more, and locally, because of competition, we take always lesser share. That's the word. I hope you understand.
Yeah, that is. Thank you for that very elaborate answer. Very helpful. Just one final clarification on that. At what rate that market is growing?
Pardon? I did not understand. Can you repeat the last word that you said?
For this product, at what rate the end industry is growing, total industry?
So that we cannot disclose any product-specific information.
So even 1 gram also all over the world, we will see that we capture that market. We will not allow to come anybody nearby us also. That's our fundamentals.
Okay. That's very helpful, sir. The second question is, on slide 32, you have said that there is this one CMO project with a leading European company, and we expect 60 crore revenue from that project in FY2027. So this is outside of DSM vitamin, right? Which is 30-35 crore project. So these are two different.
No. So it is the same project. So the DSM segment contract that we have signed is for vitamin supply exclusively to them for 10 years. And at peak, this contract will generate a revenue of about 60-70 crores. But it will be a gradual scale up because this is mainly for regulated markets like Europe, US and Japan. So as and when we keep on getting the approvals, the volume will grow. This year, because we have already received the CEP, we are hoping to tap the European market. So that is why we have said that we are going to sell about 30-40 tons, which will be around 35 crores of revenue. But it is the same contract.
Okay, clear. Then the next we launched one product in Q4, and we're looking to launch 3 new products in FY2026. So for these all 4 products, can you give some color about around 2 things? What is the end market size for each of these products? Is it like a small, or is it like, $50-100 million, like that? And are you like a first manufacturer from India, or some idea about the competitive position, that there are only 2-3 manufacturers in India? Like some qualitative color around these 4 products will be very helpful.
So the 4 new products which we are launching, first we have already launched in quarter 4. For that particular product, the global market size is about $300 million. And the 3 new products what we are launching in the next financial year, one of them which is coming in the ADHD category is about 90 million. Contrast media is about 500 million. And then we have some cardiovascular drug which is about $100 million. So if I put together all this, we are closer to $1 billion in terms of API market size. We are targeting these molecules because globally today, for these particular molecules, the supply dependence is there only on one manufacturer. Predominantly for most of these, it is from China. And as you know, the global trend, people are looking for China plus one manufacturers. I think we can benefit a lot in these molecules. We have been working on them for the past 2-3 years. We have really focused on end-to-end backward integration. So we are very confident that globally, other than China, we will be one of the first manufacturers to offer the products to the regulated market customers, not only with full backward integration, but complete regulatory support. So we are very confident that when these products launch, they will significantly contribute to the revenue. And some of these actually have the potential of becoming the top products for the company in the next 2 to 3 years.
That's very helpful. And then, are we doing any work?
Mr. Rupesh?
Yeah, okay.
No. Yeah, I would like to go back to the queue. There are several
Yes, sure. I'll come back in the queue. Yeah.
Yes. Before I take the next question, I would like to remind participants, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Krisha Kansara from Molecule Ventures. Please proceed.
Hello.
Hello.
Yeah. Thank you for giving me this opportunity. My question is on contrast media. You had mentioned in the previous call that we are in active discussions with certain global players for supplying APIs to them. So have we zeroed down on any of these discussions? Also, you mentioned that this is a 500 million opportunity for us, but I wanted to understand the dynamics of this space. Do we have the required expertise for the alternate process to which we were going to avoid the iodine usage? So if you can briefly tell us about how are things shaping up in the contrast media space? That is my first question.
In terms of technology, yes, we do have an alternative technology, and we are very confident. We have fully backward integrated this product. So as such, we do not have any dependence on advanced intermediate from any external party. So we are very confident when it comes to the technology, and even because we have a fully backward integrated product, in terms of cost of the product also, we have a fair advantage as compared to any other player. We are discussing this with a lot of global companies, but because this product is set to launch end of quarter 2, the discussions are at a very initial stage. So as soon as there is some progress on this, maybe in the upcoming quarters, we would be making some announcement. But we have a very good chance because, like I said, the manufacturing is highly dependent on 1 or 2 players. There is a need for another source in the market. Our technology, we are very confident, and with the cost of the technology that we have, definitely we see that we will have a very strong competitive advantage.
Ms. Krisha, I would request you to unmute yourself and speak.
Hello. Yeah, sorry. I was asking that so we can expect a contribution from this contract media space only after 2-3 quarters, let's say. Correct?
It would be even more because we are launching this in Q2 of next financial year. So from there, at least 3-4 quarters it will take, because as you are aware, regulatory and regulated markets are very large for this particular therapy. So Europe, US, these markets are large. So registrations typically take between 12 to 18 months. So for them to fully contribute for any API, in fact, from the time we launch it, for it to contribute meaningfully to the top line, it takes minimum 2 years.
Okay. Understood. My second question is on the CDMO side. So if you can help us understand the total number of CMO and CDMO projects that we are working on as of now, and if you can break it up into 2 parts, let's say, one being the number of projects which are in commercial stage and the other number of projects being in, let's say, early stage development. Also, one related question to this is, do we still stick to our guidance of achieving close to 200 crores of top line from CDMO segment by FY27? And did we kind of report any revenue from CDMO in this particular quarter?
No. So far we have not. I mean, there is a revenue contribution from the DSM agreement, but that is very, very small. It's not substantial. As of now, we are working on 5 CMO projects, out of which 3 are, in the commercial stage. DSM has already moved to commercial, wherein we have started supplying volumes to them. And we have 2 other contracts wherein the validations are completed and commercial contracts are under negotiation. Other than these, in some of the new launches, what we are doing, mainly the anesthetic products, contrast media and cardiovascular products, we do have 2 CMO opportunities which are still under discussion. Once they move into some sort of a concrete agreement, we will be announcing them. We still maintain our guidance of 200 crore contribution to 1,000 crore top line. But as and when Ambernath plant scales up, which is again CMO, but in the formulation space, there could be some upside to that number. But once Ambernath facility has gone into commercial production, we would like to give an update on those numbers.
Right. So the Ambernath formulation site, we were supposed to start in this quarter. You had mentioned in this PPT that it will take 2 more quarters to commission the site. So what is causing the delay for that?
So there was just some minor delay in the civil construction of the site. So that was the only delay. We have already started. I mean, the commissioning part of it is already started. I think in the next 2 quarters, we will start triggering the regulatory approval process for that particular site. We have started the validation campaign, but unless and until we don't get the regulatory clearance on the site, we will not be in a position to start the commercial supplies to the customer. So validation commissioning is in progress. Commercial contribution and the commercial scale-up batches and campaigns will start maybe in 1 or 2 quarters.
Right. Okay. Thank you. I'll join that with you. Thank you.
Thank you. The next question is from the line of Nirali Shah from Ashika Institutional Equities. Please proceed.
Good morning. Congratulations on this wonderful set of numbers. Just wanted to follow up on the previous participant's question regarding the Amarnath finished formulations. Just need a clarity. Is there any contribution that we are getting from the finished formulations in the fourth quarter?
No, we have no contribution.
Okay, and
fourth quarter is also right?
Yes.
No, there is no contribution because, like I mentioned before also, we have not yet started any commercial production from that side. We are just in the phase of validation campaign for, creating the dossier, stability, all of that. So no commercial production has started there.
When do we expect commercial production?
We are expecting some commercial production to start by Q3 of the next financial year.
and then any meaningful contribution you would be expecting a year to show?
So we are not expecting any meaningful contribution, but some small contribution in revenue we are expecting from the Ambernath side, maybe in Q4. This will mainly come from the non-reg market, wherein the regulatory approvals are not required. So some small contribution you can expect, but nothing big or in a meaningful way. I think the Ambernath side will meaningfully contribute in the FY27 only.
Understood. And just one more. So you had earlier guided for an EBITDA margin range of 34 to 36% for FY25, and now we have delivered a strong 37.4%, which is clearly ahead of the range. In the opening commentary, Satish sir mentioned that for FY26, we are guiding for a range of 33 to 35. So just trying to understand, is this more on a conservative starting point, or should we not be thinking it of like a 37% as a new base?
So what is happening in FY26 is that the newer products are also getting launched. And typically, whenever we launch a new product, the initial scale-up of these products happens in the semi-regulated market, where the average selling price for the product is not high as regulated market. So we are anticipating some, compression in percentage margin. We are very confident that in terms of the absolute EBITDA value or the PAT value, you will see a good growth. But if I were to put it in terms of percentage, we are expecting that 33 to 35%, which our chairman has guided. Plus, Ambernath will start generating revenue, in this financial year. Again, the same thing, until and unless we don't get the regulatory approvals for Ambernath side, we are unable to operate in the premium markets like Europe, US. So in that sense, when we are operating more in the semi-regulated or the non-regulated markets, the margin profile on those markets is not as high as the regulated ones. So overall, that's why the slight compression in terms of percentage. But I repeat that in terms of the absolute EBITDA value or the PAT value, you will definitely see a good growth.
Understood. That is better. Thank you.
Thank you. The next question is from the line of Raghav Agarwal from Riddhi Capital. Please proceed.
Hello. Hi. Good morning, ma'am, and good morning, sir. Congratulations on the good set of numbers. I just wanted to ask you about the progress that we are making in the plasma nutrition project and oral cancer detection kits that we've been talking about. Can you just give us some idea as to what is happening in that space?
So the plasma nutrition, we have made progress. Last quarter, we got the FSSAI certification for the optimized whey protein, which was a starting point for us, going into the market with the product. After that, we are in discussion with one of the largest distributors in the country, who is basically a large stockist for whey protein. So we are in discussion with them. We are very close to signing our first contract with them. The volume this year would not be very high. We are expecting somewhere to the tune of 100 metric tons, because it is a completely new product for the Indian market. Nobody has launched optimized whey protein before this. So for them also to formulate the product and then put it out into the market and see how the customers are reacting will take about 6 to 8 months. So it is on track. We are expecting some commercial revenue from whey protein in the next financial year. But it will not be very high because the volume, like I indicated, is about 100 tons for next year. But if the market acceptability of the product is good, it can really scale up in the next 2 to 3 years. And we are targeting at least in the next 3 years, it should touch about 1,000 or 1,500 metric tons.
Okay. So also, can you talk a little bit about the oral detection kit that you were making with the Culling's University? Is there any progress on that?
So, on the cancer detection kit, I think the first focus of the company was to get it, patented across different geographies. So, last 6-7 months, we have been working closely with the innovator, and we have already gotten the patent for neighboring countries like Malaysia, Philippines, Korea. Because in these countries, we have large partners who are interested, in developing the product and scaling the product in those markets. So I think a large part of the focus was getting the patent done for these markets. In terms of commercial contribution from the oral cancer detection kit, like I've mentioned before also, it's a completely new product, so it will go through that phase of DCGI approval and all of that. So I think it will take at least 3 years for us to, see any kind of commercial revenue happening from this.
Sure. Right. And then just one last question is regarding our geographical contribution around the space. Like we've always focused more on the regulated side. And this year, if I've seen the presentation, it says that the North American the contribution from the North America is a bit low. So are we looking forward to gaining more share in that space, that region? And how are we going to diversify more around that region?
So historically also our market share from North America has always been less than 5%. Our major markets for the product portfolio that we have always have been Europe and Latin American markets. The slight dip in sales, what you see in North American markets is just basically rerouting of some of the business to the domestic market, because we used to supply some anti-allergic and decongestant products to a CMO in the US. Now their CMO base has actually shifted to India. So that volume from US has gone to the Indian market. So that is the slight, dip that you're seeing in terms of sales in North American market. Some of the new product launches, what we are doing in the anesthetic space, in the cardiovascular ADHD space, they have a good market in the US. In the short term, I think for the next 1 or 2 years, I don't see US contribution growing very significantly. I think it would still be somewhere in the tune of 6-7%. But after that, once these products have gotten approval in the US market, we can expect North America, let's say in the next 3 years, to go up to 10%. But for us, overall perspective, I think Europe, Latin would be the larger market.
So I think we'll be able to maintain the share in Latin America and Europe like they've performed this year, right?
Yes, absolutely. If not, we expect the share to grow because some of the newer products what we are launching will gain market share. Plus, even for some of the existing products, we are still gaining market share. So other than our top 4-5 products, we already have a set of 6-7 products where we have recently got CEPs and USDMS. So those products will also now start scaling up in these markets.
Thank you, ma'am. Thank you for answering my question.
Thank you. The next question is from the line of Dr. Neha Kharodia from Abacus Asset Manager. Please proceed.
Yeah, hi. Good morning, everyone, and thanks for the opportunity. So I have 2 questions. First is regarding the Satish sir's opening remark, wherein he mentioned that volume has been modest for the year, and while regulated market deeper penetration has led to still better growth in terms of sales. So just wanted more elaboration and more clarity on like how have we grown in terms of volume on an average and versus the realization-led growth.
So by modest growth, I think what he meant is that last year we have produced a total of about the year before that we had produced about 841 tons. And last year in terms of tonnage, we have closed in at about 880 tons. So in terms of volume growth for the product, it has been about 40-50 metric tons, if I see. However, because some of these products and some of our top products have seen significant scale up in regulated markets, it has translated to a higher revenue and margin generation. I think that is what the comment meant.
Understood. And so going forward, like we expect more of volume-led growth, or we expect further, as in with the newer products, I think the volume growth should be better. So just from your end, like how should we look at that?
So going forward, you can expect a better volume growth, because also what has happened is we have partially only utilized module E in Q4. And that module E is a very large capacity. So once that module E goes into full capacity utilization, which we expect till FY2027, definitely the volume growth would be much higher. Plus some of the newer products what we are launching, like I mentioned before also, the global volume of these products is very large. So I think in the next 2 years, you will see more on the volume growth.
Understood. And also regarding our business trends, so if we talk about, let's say, the change in our business trends over the years, so where we were in last, as in 3 years back and where we are now and going forward, how are they going to change? If we can maybe talk about that.
So I think 2-3 areas where we have shown significant improvement and real strength. One is definitely the change in the geography mix and the product mix. We have been always telling all the shareholders that we are constantly working on how we can make our portfolio more robust and how we can increase other product penetration into regulated markets. I think that is very visibly seen in the numbers this year also. If you look at my top 3 therapies, earlier it was antihistamine, anesthetic, and anti-asthmatic. But for this year, we have seen very good growth happening in analgesic therapy. We have, of course, seen good growth happening in anti-asthmatic and anesthetic. But some of the other therapies like anti-gout, anti-hypertensive, vitamins, these therapies have also started contributing very well to the revenue. So I think this is the first biggest trend that we have seen, that any kind of portfolio concentration, product concentration, geographic concentration, we are now seeing it becoming more diverse. Even at the region level, if you see, Europe is one of our largest contributors, but LATAM has grown from almost 11% to 20%. Even in Southeast Asia, we have seen good growth from 11% to 16%. So definitely newer geographies are also coming in. Backward integration is one other area which we have always focused and we have seen significant improvement. So I think these are some of the key areas which have really helped us in de-risking our business model.
Understood. Thanks for that explanation. And also, just one more question. So regarding working capital days, so like this year, because we are looking at the commercialization of the Ambernath facility, so should we expect some reduction in the inventory days, or how should we look at that? Both inventory and receivable.
Dr. Neha, what will happen is that in module E, since the batch sizes are becoming larger, we might have to increase a bit on the inventory. And with respect to receivables, yes, we have been pushing across all the marketing team members that there could be some reduction possible on the receivable side. But I think inventory days is somewhere around 150, around 170 or something odd which is coming in. I think that is a good number to have. I don't think that should be a problem for us. Inventory can be managed, but receivables, we will try and push and reduce the receivables a bit.
So on a blended basis, should we expect that working capital days should remain in the similar range?
Yeah, around 150 to 160 days should be the number we should be looking at.
Understood. Thank you so much.
Thank you. The next question is from the line of Abhijit from PI Asset Management. Please proceed.
Thanks for the opportunity. Am I audible?
Yeah, go ahead.
Yeah, just 3 basic questions. So what was the reason for improvement in gross margin this quarter, and is it sustainable going forward?
We don't guide on gross margins, sir. We have only talked about EBITDA. See, EBITDA, I think we have already spoken about in the chairman's speech. I think he has already given what sort of a futuristic number we should be looking at.
Understood. The other thing is, Q4 has historically been the strongest quarter, but this was not the case this time. Can you please share the reason for the same and the trajectory going forward?
So previously, a large contributor to our revenue was our antihistamine therapeutic category, which has some sort of a seasonality in terms of sales of the product. However, like I mentioned before, we have been trying to make our portfolio more robust. And if you see this year, analgesic, anesthetic, and anti-asthmatic contribution is fairly large to our revenue. So that kind of seasonal impact, what we used to have before, I don't think you will see that moving forward. So I think moving forward, almost all the quarters you will see at a normalized level. There will not be any one particular quarter where the sales would be very high.
Understood. And the last question is, What is the tax rate expected in the next fiscal? There has been a decline in tax rate in the last few quarters. If you can shed some more on this.
Sorry, can you repeat your question?
Yeah, it is regarding the tax rate. What is the tax rate expected in the next fiscal?
Tax rate would be around, say, 25.17%. Yeah, I think that would be around the same number.
Around 25%, right?
Yeah.
Yeah. Thank you.
Thank you. The next question is from the line of Ashish Soni from Family Office. Please proceed.
In terms of the China Plus One strategy, I think two questions I want to understand. I think your strategy is working well if I understand the South American market revenue share or the revenue growth. I think you guys mentioned that generally what you are targeting is typically a Seoul or a China Plus One sort of supplier. So what's your ambition to get, suppose they get a revenue share of like 100 rupees. So typically, based on your thing, what's your internal ambition to get to like 50 rupees and what is actually happening on the ground? I just want to understand because the strategy seems, but on the ground, what is happening? What's your ambition on that regard?
Most of the companies who are looking at China Plus One strategy, I think for them, it is not about the price per se. Like our chairman mentioned, most of them want to move away from there mainly because of the regulatory quality and the sustainability aspect. So we don't have any strategy like that if we are entering into a product where there is a high China dependence, when we enter the market, we will offer a product which is 10% or 20% lower than what China is offering today. Our main intention in these products is to provide the customer with a more sustainable partner who has all the regulatory approvals, because that is one area where there is a lot of lacuna in the Chinese manufacturers. So we have a US FDA approved site, we have a EU approved site, we have worked in regulated markets for more than 20 years. So we have a very good legacy when it comes to quality and sustainability. Even the aspect we are looking at. So the strategy is never to, yeah.
So my question is, suppose China was supplying for a particular product, China was supplying for 100 rupees, right? So with all these qualitative factors, okay, but how much share are you able to gather, right, out of the 100 what China was supplying for a particular product? Like, is it 20, is it 50? I'm just trying to understand because we hear a lot of these things. So what is actually happening on the ground is what I understand.
So see, on immediate basis, let's say when we launch a new product within 12 to 18 months, when the first scale-up happens, we expect to gain at least 10% of the market share. We can go up to almost 20-30% of the market share, but that will be gradual in at least 2 to 3 years' time. It is not possible immediately to get upwards of 50% market share in any product because regulated customers take their own time. So immediate short-term target is to gain 10% of the global market share and then eventually ramp it up to 30-40%.
But do you think practically it's possible to get to like 50% in 5 years sort of thing for a particular product?
Yes, I think in 5 years it is very much possible, and that kind of a trend we have seen in our existing portfolio also. In some of the products that we manufacture, our key products, the initial suppliers were Chinese manufacturers. But then we have built up large capacities, we did backward integration, we did the registration, and today we have become in fact the first suppliers for those products. So it is very much possible. It takes time because registrations take time. But it is possible to get the leadership position in some of these molecules.
And regarding CDMO space, what's our strategy compared to our Indian competitors? Because we keep on hearing that a lot of projects are coming, China Plus One strategy, a lot of companies are adopting. Because somehow I see compared to other Indian players, your CDMO space is at least number of projects, somebody asked, it's not growing. So what is stopping us from aggressively going after that space?
So we are going aggressively, for those CMO, CDMO projects. But you have to understand that any CMO, CDMO project takes 2 to 3 years to commercialize because we do not focus on domestic market more. If you see our revenue today, also almost 85% is export. So all of the CMO opportunities what we are working are in the regulated market space. Europe and Latin America are the two main geographies where we are, having multiple CMO, CDMO discussions. So we are aggressively working on that. But for it to translate into commercial revenue, it is going to take minimum 2 to 3 years. And we are fairly new in the CMO space. We started doing CMO just about 2 years back. So maybe FY27, FY28, you can see meaningful contribution from these opportunities.
And do you think CDMO space can be like 50% of the revenue in 5 years down the line sort of thing, or CMO?
No, I don't think 50% of revenue will come from CMO. I think 30-35% it is possible in the next 4-5 years. But because along with CMO, CDMO, we also launch every year our own new products in our portfolio. I think that will also grow. So I don't see 50% coming in the next at least 4 years.
Okay, thanks and all the best.
Thank you. The next question is from the line of Abhishek from Padmaja Investments. Please proceed.
Yeah, am I audible?
Yes, you are audible.
Yeah.
Yes, you are audible.
Yeah, so my question is on, I checked the DMS database, like why are there new filings for DMS in the year 2025? That's my question 1. And question 2 is, what will drive the growth in FY26? Because for FY27 and future, I think it is good. But for FY26, like Ambernath technology is also post-launch. So can you explain in detail or in summary, like what will drive the growth in FY26?
I'm sorry, actually your voice is, I'm not able to understand your question clearly. It's very muffled,
Yeah. What will drive the growth in FY26? For the future, it is very clear. For the FY26, what is the constraint?
Okay. So the major growth drivers for FY26 would be the scale-up of some of our existing products in regulated markets. Some contribution coming in from the CMO, CDMO opportunities that we have. And then the new products what we are launching, especially the anesthetic product which we launched last year in Q4, some contribution from that. So in a nutshell, scale-up of existing products in more regulated markets, new product contributing to revenue, and CMO, CDMO opportunities.
Okay. My second question is on, I checked it in our annual report that you are also working on this peptide, semaglutide. Is it can you talk about that?
So yes, we are working on this for our finished formulation division in Ambernath. But as of now, this is still in R&D. So we have not yet even completed the R&D trials. For this product to come out of R&D and for us to commercially launch, we are at least looking at 2.5 years time. So on that particular chemistry, we have not made fast progress. I think the first launches would be anesthetic, ADHD, cardiovascular, those kind of products.
Okay. And can we expect any DMS filings for this in the year 2020? Because I don't see any new DMS for the year 2025 in your database.
Sorry, I didn't understand. Semaglutide DMS you are asking?
No, not semaglutide DMS. Like in general, I just checked the year DMS database. I don't see any new DMS for the year 2025. For the year 2024 and can we expect any?
Yes. We are expecting to file at least 3-4 new products in the next financial year. Of course, some of the new products what we are launching, those also we will file. And there are some existing products in our portfolio. Those also we are in discussion with some customers who want us to file those DMS. So you can expect 3-4 DMS in the next year also.
Yeah, thanks for answering my question. And great job on that mix.
Thank you. The next question is from the line of Devansh Patel from Anubhuti. Please proceed.
Hi, am I audible?
Yes, you are audible.
I just had a question regarding the other OpEx line in your financials. I think that's gone up about 33%. I just wanted to know if you could provide some color on that.
Basically, if you look at it, the other OpEx line also has the freight component. All the freight costs have all increased across the corresponding commission. The increase in sale will also have a direct impact on other expenses which are directly linked to production and sales. So those are the line items which have got increased. Basically, the commissions, the freight, the stores and staff, these are the numbers which have got increased on the other OpEx line.
Okay, understood. And my last question is just on the profit margin front. Since it has gone up to almost 70% in this quarter on a quarter basis as well, and this, at the same time, the LATAM contribution has increased. So you previously mentioned that Brazil is a regulated market. So is this where your greater margin is coming from? Because Europe and America has come down. So I just wanted to understand that next.
So Europe actually has not come down. In terms of percentage, it might look that there is a slight dip in Europe because, of course, our base is much larger from 570 to 696. But if I look at the actual sales value of Europe, it has gone up only. So we have seen growth in Europe, LATAM, even in other markets like Southeast Asia, we are seeing good growth happening.
And the market expansion is coming from these markets, right? Like the regulated ones?
Yes.
Okay, perfect. Thank you so much.
Thank you. The next question is from the line of Richa from Equity Master. Please proceed.
Thank you for the opportunity. My question is, on this formulation facility that is coming up, if you could just highlight the investment that has gone into it and what kind of revenue potential you are expecting, and whether this 1,000 crore guideline factors in any contribution from defined contribution from formulation facility.
As of now, around 130 crores have gone into formulation facility. And the revenue, at the max, the potential is around 450 to 500 crores of revenue is possible from the formulation facility. Most probably by Q2 or early Q3 is where we believe that we would be able to capitalize.
Okay, but within this target of 1,000 crore, what kind of revenue are you factoring in, by FY27?
Could be a very, very minimal number, around say maximum, not more than around 100 crores is what we are factoring. If at all, that could be, this depends upon all the regulatory approvals which we are expecting from the site. If everything goes well, those will be something will be an added advantage, but which are not factored at this stage in the 1,000 crores.
Okay, understood. And so my second question is on the pricing scenario. Are you witnessing any kind of pricing pressure, and how confident you are when it comes to this 33 to 35% kind of margin guidance?
So as of now, we are not seeing any pricing pressure for the products that we operate in. And we are very confident that we will be able to maintain this 33 to 35% margin because we have a lot of new products. We have diversified even the geographies. With the new launches, the formulation keeps coming in, and plus scale-up of our existing portfolio in regulated markets. I think we are very confident that we will, maintain this 33 to 35% EBITDA margin.
Okay, and then your margins in LATAM versus Europe market, would they be similar or LATAM would be lower than European market?
European market is definitely slightly higher than LATAM.
Okay, and how big the delta could be?
That we'll not be able to discuss too much into that.
Okay. And then another question is on client concentration, which has, in the presentation, it has gone up. I just wanted to know what is the contribution from top 3 clients, and do you perceive this as a risk or opportunity, whether you're growing with some of the largest end players, some kind of qualitative comment on this one.
So our top 10 customers today contribute almost 50% of our revenue. But you have to understand that the top 10 customers, in that 5 or 6 are actually large distributors. So these distributors in turn are catering to hundreds of customers. So that way itself our customer base and the top 10 customers are diversified. These large distributors have been working with us for more than 15-20 years. They are basically our representatives in those markets. Just for the ease of business and payment terms, they buy the product and they stock it in their warehouse. And against customer requirement, they supply it to the small customers. So as such, that top 10 itself is really not top 10. It is a mix of hundreds of customers.
Okay, understood. And just last clarification I needed on the capacity. Is it 932 or is it 1,000 something? Or the number looks different because maybe there is some element of backward integration. If you could clarify that.
It's around 1,020 KL across the Lote plant, yes. I think that is the final number.
So why is this 932 and why there is this slight difference in the presentation?
No, actually the 932 KL is for the Lote site, and that 1020 KL which we have put up, that also includes the Ambernath capacity. So all put together at the company level across Lote and Ambernath, it is a 1020 KL capacity.
Okay. Thank you and all the best.
Thank you.
Thank you. The next question is from the line of Srihari from PCS Securities. Please proceed.
Yeah, am I audible?
Yeah, you are audible.
Yeah, thank you. I have three questions basically. Firstly, if you could please help with the delta in contribution margin for integrated and non-integrated products. Secondly, for the contrast media product, what is the kind of aspirational market share you have in mind? And thirdly, are you planning to install inhalants in the formulation unit? Thank you.
I'm sorry, can you repeat your question? I was not able to clearly hear you.
Yeah, first one pertains to the delta in gross margin for integrated and non-integrated products.
So that, like our CFO mentioned before also, that we never discuss or guide on any, gross margin. However, at the EBITDA level or in general qualitatively at the profit margin level, definitely the products which are backward integrated have a much higher profit margin because we manufacture these right from the basic stage. We don't take any kind of advanced intermediates for these. So definitely the profit margins are much higher as compared to a non-backward integrated product.
So would it be around 10%?
That delta we will not be able to define.
Okay, yeah. Second one was pertaining to the contrast media product. What is the kind of aspirational market share you have in mind?
So on an immediate term, like let's say in the next 2 years, we are targeting at least 20% of the market share because this is a very large product across regulated markets and we will take a little bit time to get the CEP and the USDMF in place. So I think in the next 2 years, the 20% market share is what we are targeting.
That translates to $100 million. Is that what you're saying?
No, the API is about yeah, correct.
Okay, $100 million for the single product for 2-3 years.
Yes, over the next 2 to 3 years. I mean, the current discussions what we have are to the tune of that if we are able to get the full volume.
That's great. And finally, whether you plan to install inhalants line in the formulation division?
I couldn't hear you. What line?
Inhalants.
Pardon?
Inhalants.
Inhalation.
Yeah, inhalation products.
Yeah.
Of course, yes.
And the asthmatic also we have seen good growth. What is he saying?
No, I'm talking about
Okay. Are you asking that in the finished formulation, are we planning any inhalation products? Is that the question?
I need to say inhalants. I mean, do you plan to install pumps? I'm asking this because Spravato seems to be an opportunity.
Okay. So that's what I think what Krishna said, that are we expecting to put up a line for inhalation devices in our formulation plant, correct?
Right.
Yes. We are. Yes.
Any timeline?
We are working on 2-3 very niche CMO opportunities, wherein for some of our existing products, we have found large companies who want to tie up on the inhalation part of it. We are expecting this to sort of take off in the next 12 to 18 months. But yes, it is in pipeline.
So you're working on it, and it will take about 12 to 18 months to commission. What is the kind of outlay you would be incurring on that?
Pardon?
What is the kind of outlay you would be incurring on that CapEx?
So the CapEx is already done. What Krishna mentioned in the Ambernath CapEx, what we have done, this is including that inhalation line. So Ambernath facility basically has 3-4 different lines. One line is the liquid anesthetic line that we have for bottling. The other line what we have is oral solids. The third line we have inhalation, and then we also have made provision for an injectable line, but that we will be doing in a phase-wise manner. So for the first 3 parts, what I mentioned, the liquid anesthetic, the oral solids, and the inhalation, that is already part of the CapEx what we have spent last year on Ambernath.
So, can you share if you are working on Spravato?
Sorry to interrupt.
That we will not be able to discuss. It's a very product-specific information.
Okay.
But we are working in that area.
Okay, that's great. Thanks a lot.
Thank you.
Thank you.
Ladies and gentlemen, due to time constraints, that was the last question for the day. Thank you, members of the management and everyone for attending. On behalf of Supriya Lifesciences Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.